Hello folks, welcome back to yet another video. And in this particular video I'm going to go over what I achieved during the January month. I haven't really invested the whole month. I've started about a week or two into it. So we'll see how that worked out, and then we'll look at the accounts on M1, and we'll talk a little bit about the news and what's going on over there. So just stick around. It'll be fairly interesting. Hopefully not too long. All right, so looking at the spreadsheet here, you can see that that I've invested about $300 month of January, and when I looked at the January 31st, my balance was 293.92 cents, which makes a difference of $6.08 and roughly about 2% down on my investment. And that's fine. As we know, the stocks go up and down. That this is bound to change. Not really a reason to be concerned. Just need to be plowing through this stuff. And as this chart reflects, obviously it is on a -6. Hopefully, this coronavirus news doesn't dampen market too much. But we'll see. We'll see how it goes. And then there's a small point I want to make about coronavirus and some previous incident with the smallpox. But when we get there, anyhow. So let's take a look at what's going on with our actual holdings. So this is our holdings right here, and they haven't changed. The amount of shares that I owe at this point, I do have $250 waiting to be deposited. So we're looking for another $250 to be added to the account within next day or two. So stay up on that. So these numbers will change, and it will affect obviously the income and then the percentage needed of the money for the goal of 100 a month from the dividends. All right, let's look at the M1 account. So let's see if this is the latest. Looks like this is the latest. So we are at 294.90 at this point. So it looks, minus 4.96. Effectively 4.72 since we have the 12 cents in the account. And as of today, February 3rd, which is the first trading day in February month, I'm down 1.66. So if you look at that, ending on January 31st, I was down 2%. Now market has gone up a little bit. So like I said, these things are volatile. They go up and down, but we are really not in it to make money or however day by day. We are here to make dividends over a long period of time, and knowing the market, it should go up in a long time frame. So let's quickly take a look at how the companies did. But before we do that, actually, I wanted to show that there was a little bit of dividends earned. Now, I couldn't figure out when and who gave me this 24 cents. Activity hasn't been really updated with that transaction, so I guess yay. I mean, it is 24 cents only, but it's a first dividend, so makes me happy. And so as soon as I know who it was, will update the charts and let you guys know in the next video. In the meantime, let's look at all these companies and see who did really good. And probably you would have already figured out that a lot of companies that didn't do well were in this particular portfolio are the ones that haven't really done that great during the holiday seasons, because this is an actual reflection of how they did during the holiday. So I'm talking about December months or the last quarter. And no surprise, the UPS, 3M, Target, Walgreens, Walmart, Verizon. I mean, you're looking at these and you say, yeah, that makes sense, right? Because news were saying that the shopping wasn't all that great for the December, so that's why these were affected. However, I don't look at this as loss. I'm actually looking at this as uh, you know as new possibilities to buy more stock of these companies for less money. Because at the end of the day, I will be buying more regardless of what the price is. So for me right now, it's a good opportunity to buy some more. And there's this thing called stock averaging. I'll talk about it in the next video maybe, uh, but just keep that in mind. All right, so the only companies that have done so far, well, the stayed in positive at least. We're talking about the real estate company here, and then utility company, Coca-Cola and Waste Management. They did good. And Home Depot, I'm surprised, has actually stayed here as well. So that is how the folder, or yeah, how my portfolio looks like. All right, so let's head on to some of the interesting stuff that I've learned um, while I was researching on the internet regarding coronavirus. I just wanted to put it out there because I thought it was kind of interesting find. So let's get into that. Okay, so I read this in the news, which I thought was kind of interesting. I believe this is NBC. Uh, so here's the interesting paragraph right here. So the drastic move on that the CDC has not issued in 50 years comes as the rate of new coronavirus case has grown dramatically in recent days. The last time the CDC issued a quarantine was in the 1960s for smallpox. So CDC is a little bit wary of what's going on with this coronavirus, right? And although this is really a common cold, um, essentially not comparable to smallpox, it is still kind of a problem, right? Because market gets a little shy. People don't want to invest money because there's uncertain. They're not sure what's going to happen tomorrow, and so on and so forth. So that doesn't really work well on the market. So CDC is saying that hey, this is a problem, and countries putting stop to travel to China and just keeping an eye on all these outbreaks and whatnot, making sure that there isn't an actual outbreak outside of China. But here's something interesting that I've noticed. So if you see here that they said the quarantine was in the 1960s, so I didn't really dig that deep to see which year in particular. But what I did find, and I looked at the Dow Jones, one of the major market indices, and here is 1960 and 1980, essentially 85. So I took that 25 year chunk out of that market just to show you what happened. So here are the 1960s. So market was going all along, going up, 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 whatever, and then the market crashed. 1960s, it went all the way down to, well, 1982 before it started correcting back upwards. So it literally took about 15 years of downturn. Now, is that an actual reflection of what's going to happen if we have an actual outbreak of coronavirus? I don't know. I mean, I can't really compare it to smallpox. It's not really the same thing, but but also keep in mind that the medical breakthroughs and technology that we have today is vastly superior than back in 1960s. So I wouldn't, and it's an interesting fact, I guess, from an analytical point of view. All right, let's go forward and see some of these stocks that I own, and see whatever news we have for them. Okay, so most of my news comes from the Seeking Alpha website. However, there's plenty of other websites you can get your information from. It's just looking at every possible meaningful website out there will just cause a lot of reading and rereading of the same information. So I rely on Seeking Alpha to get the latest and the most up-to-date information, if you will. So looking at some of these, so I'll talk about four: the Walgreens, the Realty Income, the 3M, and Coca-Cola. Just kind of a mix of various stuff. So for example, here they're talking about Walgreens. So the dividend yield is about 3.6%, and they raised or increased a dividend payout 44 consecutive years. So that tells you, right there in this first sentence, it tells you that Walgreens has been the strong company to have hold, their stocks, and they've been paying out. Not only they've been paying out, but they've been actually increasing the payout per share for 44 consecutive years. And they're looking at increase to an average of 5% over the next 5 years. So, if let's see, so they're looking at, so go from 1.37 down up to 1.88 per year per share. So that's pretty good. So I'd say, this is the one to hold for a long time, unless something happens that we can't foresee today. That interesting fact about the Realty Income, they are being added to S&P 500 Dividend Aristocrats Index. That is an actual good news for the people that have their stock, because now they're gonna have a lot more opportunity to grow, not only in price, but in every other which way. So that's pretty awesome. And they've been invited because they've been increasing their dividends every year for the past 25 straight years. And this is the one that pays out monthly rather than quarterly. So it's a good stock to have, and it's one for the long haul. All right, the next one, the 3M. They haven't really done that great as far as making money versus expenditures and whatnot, but they're still good, solid dividend stock to have. And as you see, the total annual sum of $5.76 per share. So they actually pay out rather well. I mean, yes, their stock is expensive, but 5.76 per share, that's actually not a bad dividend to be receiving on a yearly basis. And then Coca-Cola. I mean, they're talking about Coca-Cola having some issues because they've been paying the dividends for forever. I mean, they've been paying more dividends for longer than I've been alive. I mean, they've been paying it for past 57 years. And not only they've been paying it, but they've been increasing each year for the past 57 years. And what they're essentially saying is that they're reaching the cap where the income versus expenditures and what the money available for the dividends doesn't leave them much, cash to grow, promote to new directions, new products and whatnot. So we'll see where that's going to go. We got to keep an eye on this. But because the price is rather cheap in comparison to other stocks, this is an awesome dividend to also hold. I mean, and I think Warren Buffett holds a lot of stock in Coca-Cola. So, all right. So that wraps up this week's video. If you have any questions, please put down in a comment, and do subscribe, please. That would be awesome. All right. Talk to you guys later. Bye for now.